So after the Roaring Kitty live stream, GameStop shares tanked by 40%, which is something that I suspected would happen, as I posted this on X right here, right before the live stream. However, in my opinion, the GameStop saga is far from over. In this video, I'll tell you exactly what is going on with GameStop shares. We're going to dive into the share offering. When is GameStop going to complete the offering? How it's going to affect the share price, as we've already seen this happen. We have evidence of this happening, and how the stock reacts. We're going to dive into the current short interest, which is the highest of all time. And then we will get into Keith's currently open positions as the June 21st expiration on the call options near, which is also an OPEX date, by the way. So we're going to get into that. And lastly, whether I think there is a massive trade opportunity for us to take advantage of still. So let's dive right into it. Why did GME tank on the day of the live stream? Well, the answer is twofold. One of them was the cause that I suspected, which is a sell the news event. See, the stock market is forward looking. So leading up to an announced event, everyone that wants to buy shares likely already has, and you're going to need a new wave of volume, whether new buyers or existing buyers, that equals the volume that you previously saw in order for the stock to keep running. Otherwise, when people start profit taking, that has a snowball effect, and you will likely see more capitulation happen, driving the stock price down. However, the second and more important reason that the stock price tanked was because GameStop announced a surprise earnings announcement before their actual earnings dates. Companies have the right to do this. Any company can do this, and their companies will do this for strategic reasons. But on top of that, they announced an additional share offering. So let's talk about that real quick. Now, a company can issue shares whenever it wants practically, as long as it makes the proper announcements to the public and then does the proper filing in the form of an 8K, as well as some other SEC regulatory paperwork. Now, the reason that companies do offerings is because it is much better to raise money through the sale of public shares than it is to actually take out loans and financing. Now, this becomes especially commonplace when a company that hasn't done well financially, like AMC, like GameStop, if their stock price starts rallying to levels that they haven't seen before, or levels that are anomalous based on the range that the stock is trading, then the company obviously is incentivized to take advantage of that higher pricing and lock in shares at that higher pricing by offering shares at this new elevated price that the company doesn't usually trade at. Now, GameStop recently did this on May 17th. So on May 17th, GameStop filed an 8K, and they said that they were going to issue up to 45 million shares. Now, a company has to file an 8K statement within 4 business days of the event. And what we've seen with GameStop historically is that they don't take time in order to file these 8Ks. Whatever action they're about to take, they file these 8Ks immediately. Now, this is good for the investing public, especially those that are interested in GameStop shares, because you immediately know what GameStop is about to do. It's not like they do something and then report it 4 days later. And this becomes relevant in one of the next things that I'm about to talk about. So on May 17th, GameStop announced that it is issuing up to 45 million shares after an almost 500% rally within a 2-week period, when Roaring Kitty had tweeted for the first time in 3 years. And if we take a look at the stock price here, you'll see that on May 17th, that is when the stock actually died. And a lot of people speculated that the pump was over. Now, when the company issues shares, they don't have to dump them to the market all at once. As a matter of fact, the 8K said up to 45 million shares. So they don't even have to issue 45 million shares. They can issue 1 shares up to 45 million. But like I said before, GameStop has a good habit of filing these timely 8K statements. And on May 24th, GameStop filed another 8K saying that they completed the issuance of 45 million shares. So this is 7 days later. And if we take a look at the chart, you could see here May 24th, the day that the issuance was completed, was actually the bottom of this rally. And then GameStop rallied again after Keith disclosed his position not only of 5 million GameStop shares, but disclosed that he was holding 120,000 call options that expire on June 21st, which is an OPEX date. OPEX simply stands for options expiration, and we get one of these every month, and you tend to see a lot of volatility going into OPEX. So stay with me here. On June 7th, GameStop issues another 8K, announcing that they are selling up to 75 million shares. Now, this isn't 75 million new shares. This is an additional 30 million shares on top of the 45 million that they previously sold. So because of that surprise announcement right before Keith's live stream, as well as the fact that they announced earnings ahead of time, we saw GameStop tank by 40%. But here's why I don't think this is over and why there might be another rally in sight. It took GameStop only 7 days to complete the issuance of 45 million shares. So we got the 8K announcement on June 7th that it was going to issue up to an additional 30 million. So if we are going to follow precedents, right, if we're going to follow historically what GameStop has done, then we should likely get another 8K maybe next week as of the time of this recording, saying that GameStop has completed the issuance of the additional 30 million shares. Now, this would all happen, hopefully, before June 21st, which is the expiration of Keith's call options. And I'll get to why that's important in a second. But if GameStop can quickly issue these shares and get the market to digest this, which is less than the number of shares that they issued before on May 24th, if you couple that with the short interest right now, as I told you, the short interest right now is higher than it even was in 2021. Now, this is a little bit of an unknown here because the naked shorts, the illegal naked shorts that were going on in 2021, which was part of the whole reason that this short squeeze started, or that this whole saga started, really, right? That is something that most likely happens off books, right? We're not going to see it in short interest if it's a naked short, because naked shorting is illegal, right? So this right here, this chart of short sale volume, this comes from FINRA. So this is what is officially reported. So according to what is officially reported, the short interest in GameStop is just as high, if not higher, than it was in 2021 at the peak of the momentum squeezes that were going on then. This is why I said this saga is far from over, because if we can complete the issuance of these shares and the market can digest this, and we still have a ton of short interest, the highest ever according to this chart. And if Keith exercises his call options, which amount to 120,000 calls at $20, that would mean that he would force the exchanges to go find 12 million shares immediately. Now, for those of you that don't trade options, 120,000 options, each option in the US represents 100 shares. So 120,000 times 100 equals 12 million shares. If he exercises those 120,000 call options, then they have to, the brokerages, the exchanges will have to go out and find 12 million shares to award him, because that is his right as a call option buyer. Now, for those of you saying that he can't afford, whatever, $240 million, right? It would be it would be 12 million times $20. Yeah. That he can't afford $240 million. Well, obviously at these levels, you can find somebody to finance you if he doesn't already have a backer, which he said he doesn't. Plus, he already owns 5 million shares outright, so he does have some equity. And then obviously we start talking about margin, etc. Once you get to these levels, you can find a bank to finance you. I mean, the same way that Michael Burry found a bank to finance his swaps, the same way that all these hedge funds somehow find all the capital in the world to naked short companies. So if he can get an institution or, a rich philanthropist to believe that these shares are going to be worth a lot more than $20, then yeah, I think that to get someone to partially finance him is not out of the question. So we're not even going to address that. And then before we get into the trades, the last thing that I want to talk about is the actual position of the CEO, Ryan Cohen. So Ryan Cohen currently owns 10% of GME. However, with this new offering, his stake ownership in GME would likely fall below 10%. So he will likely have to buy additional shares or be compelled to buy additional shares in order to bring his stake up to 10% or more. Now, he did this in 2023 when he bought an additional 444,000 shares, and it's not out of line to think that he might buy additional shares to bring his stake back up. So if you get the combination of a new 8K statement showing that the issuance is done, if Keith's position is actually exercised, the 120,000 call options are actually exercised, and if you get an announcement that Ryan Cohen is buying shares, even if it's much less significant than Keith's position, I think those factors can actually lead to another squeeze. Now, in terms of volume, this is the highest volume that GME has experienced since 2021, right? Both on Thursday before the live stream and then Friday, the day of the live stream. However, I want you guys to remember that the volume in 2021 was just absolutely insane. So right now, we for Thursday and Friday, we're talking about a volume of roughly, let me just pull up the volume here. We're talking about a volume of roughly 278 million, right? Around then. If you remember some of the days in 2021, we were getting over 700 million a day in volume for GameStop on some days, right? So I don't think there are as many market participants now as there was in 2021, but I don't think this rally is necessarily over here as long as the issuance happens quickly. So with that said, is there a trade to take advantage of now? And as a caveat, obviously, we're dealing with a meme stock here. We're dealing with an anomaly. This is an anomalous situation based on a lot of moving pieces. There's still a huge outstanding position open. But in my view, I think there are a few things that one can do here. We have quite a few options here, and it really depends on your budget and your risk tolerance. But in my case, I think I will likely sell these $20 options, these $20 puts on GME because the stock price tanked, all these puts increased in value by 100% last Friday as of the time of this recording. So if Keith's call options are at 20 and he ends up exercising those call options, meaning that the exchanges have to go out and find 12 million shares at $20, in my view, if that happens, then the $20 mark is a sure bet. And I think this $140 per contract will likely be easy money. Now, this obviously isn't going to make you a millionaire, but we aren't really talking about that. I'm just talking about the different options that are available to me here if I want to make certain trades. Another thing I can do, which is going to be still rather expensive because the implied volatility on GME right now is 257%, which is in the 71st percentile. But what one can do is buy a strangle on GME, because if you look at June 21st, the expected move is plus or minus $15. And right now, GME, as of the time of this recording, is trading at 28. So that means that, if the stock price is essentially below 13, or if it is above $43, then that strangle will make money, and you don't really have to guess a certain position. You don't have to guess short or long, as long as it makes a big move in either direction. And going into OPEX, I think that is obviously not a surefire bet, but it is something that one can speculate on and something that I might do myself. Obviously, you could just buy call options as well if that's in your risk tolerance, betting that the stock price is going to go through the roof, especially since calls tanked on Friday after the live stream. However, in my view, I'm going to be monitoring for that 8K statement that shows that GameStop's issuance has completed. That to me is, if I were going to buy calls, that is likely the time that I would buy calls, is after I'm certain that all those shares have been dumped on the market. And lastly, another thing that you could do is you could do a poor man's covered call, right? This is where you buy a leap. So say like the $20 leap expiring in January 2025, and you just sell calls above your strike price in the shorter dated month. So you could essentially buy a $20 call expiring in January 2025 and then sell calls that are above that. For instance, sell the $40 call expiring June 21st, or the $50 call expiring June 21st. And, same thing for July, same thing for August, etc. This one I like less because I'm not sure that in January 2025, GME is going to hold above $20. It could very well. But, for me, this whole play here, this whole story is based on what is going to happen in the short term between now and June 21st. But I will be posting all of my live trades as I usually do in the trading floor. So if you wanted access to that, not just for GME, but also for our day trades, I day trade futures with the team every single day. I go live and day trade futures. So if you wanted access to all of my analysis, my trades, my day trades, etc., click the link in the description below. And we are also hosting a free webinar on June 23rd regarding futures trading, ICT strategies, how to trade prop firms, etc. I'm going to be teaching you guys the ropes. It is 100% free. Make sure that you click the link in the description. First 1,000 people that get in are automatically in, and then it's capped. So if you want a spot, make sure that you sign up using the link in the description below, and I'll see you guys on June 23rd. Anyway, let me know your thoughts below. Do you think that GameStop is going to happen? I'm sure I'm going to get a wide range of comments here from, saying that GameStop is dead to GameStop is going to be $2,300 a share. And, Keith is going to be worth more than Ken Griffin. So leave it in the comment section below. Let me know what you think is going to happen. Let me know how you are positioned. Are you buying more shares here? Are you buying call options? Are you just sitting on your hands? Would love to know. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.